We thank you so much for joining us today. We welcome now Charles Allen, partner at ESA Law. Hey, Charles, thanks for coming on.
Hey, Gerard. How you doing today?
I'm doing fantastic. So we wanted to visit with you today about the Corporate Transparency Act, something you've done a lot of homework on, and of course, it had a great presentation, very, very informative. And it's one of those things that feels like it's kind of just living under the radar out there, that a lot of folks may not even be aware of this law and what their obligations are. Tell us about the CTA, the Corporate Transparency Act.
Sure. Yes. Well, first of all, thanks for having me, and happy to talk about it. It is something I would say has been sort of a thorn in my side, and for all those who practice in my area, tax business law, using a lot of entities, things like that is all wrapped up in this Corporate Transparency Act. So let's start with what is the Corporate Transparency Act. The Corporate Transparency Act was passed on January 1st of 2021, and it was one of those bills that's a rider, like so many of them. You know, you've got these 1,000-page bills and all these acts that are riders as part of the National Defense Authorization Act.
Mm-hmm.
Didn't take effect until January 1st, 2024. Ultimately, what it requires is reporting entities, which we'll talk about what that is. Reporting entities have to submit beneficial ownership information to the Financial Crimes Enforcement Network of the Treasury Department. We call that FinCEN. And so what it's going to require is a lot of entities. We're talking someone sets up a single member LLC to own a piece of real estate they've invested in, or some family members own some family land together in an LLC, or someone who operates a business out of an LLC, or limited partnerships, or any other entities. They're now required to comply with this Corporate Transparency Act.
So what is there a size? Is there a size threshold, Charles? I mean, if your business is below a certain revenue level, for example, are you still required? Is that part of the law?
Unfortunately, there is no de minimis requirement. So a single member LLC that has a bank account with $100 in it is technically required to comply with the Corporate Transparency Act. There are 23 exceptions. Most of them not relevant to your everyday folks, like insurance companies, some public accounting firms that are registered under Sarbanes-Oxley, things like that. There is one actually for large businesses, and a large business is defined as a business that has more than 20 employees, so 21 plus, more than $5 million of gross revenue, and an office in the United States. So if you're a large business that meets all three of those requirements, you're not required to comply. But for the small folks, there is no exception.
What is this concept of beneficial ownership? What is it exactly does that mean? Because those are the people who have to complete all this documentation, correct?
That's right. So the beneficial owner, you can really get in the weeds here when you start talking about complex structures and things like that. But at the end of the day, you look at who owns 25% or more of the entity. If you own 25% or more, you are a beneficial owner. And if you exercise substantial control, then you're a beneficial owner. So 25% ownership, straightforward for a lot of entities. That can get more complex as you start, having these tiered entities, and then you get trust involved and things like that. And then control, who exercises substantial control. For that, you have it's facts and circumstances, but ultimately you look at like the manager of an LLC, or if you have a voting and non-voting shares of a corporation, whoever controls the voting shares. Senior officers like your executives, your C-suite executives, high-level executives are de facto substantial control. So each one of those people is a beneficial owner. Ultimately, you're going to have at least one beneficial owner, but it's really limitless as to the number you could have based on the circumstances.
And so what exactly is involved in the compliance with the CTA?
So let's start with due dates, okay? So if your entity, let's just say I have an LLC, I set it up in 2023, if it is established prior to January 1st, 2024, then you have through the end of this year to comply, December 31st, 2024. So you got 1 year to comply. If you have a new entity, so that's one that's formed in 2024, then you have 90 days from the date you form it. So if I set up an LLC, on January 1st of 2024, that was due April 30th. I'm already late. Because you've just got the 90 days to get it done. And so, what you have to do is you have to file what they call a beneficial ownership information report. And that is done through a portal on FinCEN's website. And you have to give them a whole bunch of personal information, name, address, contact information, a identifying number such as a social security number, driver's license number, passport number, and then you even have to submit a picture of your validating document. So if you're using your driver's license, using your passport, it's that. It's pretty onerous. And so imagine if you have an entity with 10 members and they're all beneficial owners, and you're trying to track all this information down from them, it can get complicated.
So you could need the services of your business attorney, I would assume, perhaps your accountants as well.
That's right. So, funny enough, we know a lot about this, but we are not actually filing the reports for people. I think where our firm can provide some valuable assistance is determining who your beneficial owners are. Because like I said, if you and I own an entity together, that's pretty straightforward. But a lot of times it can be really complicated. So making sure you know who the beneficial ownerships are and then getting a report done. Look, there are numerous options out there for people who will file the report for you. Most of them are, you give us the information, we'll file it for you. So we just hadn't gotten into that. It's kind of a volume game, and that's not really where our expertise is. And so for that reason, we've shied away from actually filing them, but we do provide a lot of advice on who's beneficial owners, things like that. And another thing to keep in mind is for 2024 and forward, not only is it the beneficial owner, it's also the company applicant. A company applicant also has to report their information, and that is the person who filed the actual certificate. So if you're in Mississippi and you're setting up an LLC, you file a certificate of formation.
Gotcha.
The person that actually submits it, and also the person who directs them to submit it. So if I direct, another attorney in my office that works with us to submit it, or if I direct a paralegal to submit it, then the paralegal is a company applicant, but I myself am also a company applicant.
That's crazy. We got a couple of minutes left, Charles. So I was explaining to the audience earlier that the basis for this ostensibly is to help combat money laundering and perhaps investment in terrorist activities and other sort of illegal activity.
That's right. So that's the basis for why this was passed. The goal is to combat money laundering and funneling of money to terrorists through sort of unscrupulous channels, if you will. Yeah. And I get that, but this is it goes a couple of steps too far, in my opinion. It is very onerous, and when you and I were talking at the accounting event, the biggest problem is going to be getting people aware of this. And I had a lot of accountants come up to me after that presentation, small town Mississippi accountants, and saying, look, I've got all my clients have LLCs and things like this. They're how am I going to get them to do this? It's going to be a problem. So, and let's talk about the penalties real quick.
Yeah, tell me that real quick before we go. We got about a minute.
All right, so penalties real quick. If you willfully fail to comply, it's $500 a day civil penalty for every day you're not in compliance, and then there's also a potential $10,000 criminal penalty and up to 2 years in jail. So $500 a day can add up fast.
A day. And that'll be assessed by the federal government, I assume, right?
That's right, by FinCEN. So,
and will that be something that the IRS will be looking for potentially? Will that get somehow inserted into your tax returns?
So it shouldn't, and it shouldn't go against your refund or anything because it's not a tax.
Okay.
So the IRS is free to use tax refunds from 1 year to against other years, but it should be separate. That said, the IRS will have access to this database, for tax reporting purposes, of course.
Which might trigger an audit, might increase your likelihood of an audit potentially.
Yeah, who knows?
Unbelievable.
It's going to be a pretty big database. So there's still some hope out there, though, Gerard. There is a case out of Alabama that ruled it unconstitutional. That's currently on appeal in the 11th Circuit right now.
That's good to hear. We got to go, Charles.
22 briefs have been filed in saying
Appreciate
that the
it.
CTA should be unconstitutional.
Man, it's unbelievable. Thanks a lot, Charles. Appreciate it.